The gravitas of DIFC regulatory approval. What is the DIFC? The Dubai International Financial Center, DIFC, is one of the world's preeminent financial jurisdictions, second only to London and New York in global influence. It hosts over 30,000 companies, from multinational banks to fintech unicorns, all operating under a common legal, regulatory, and judicial framework based on English common law. Why does this matter for blockchain? Historically, blockchain companies have faced skepticism from regulators who worry about money laundering, consumer protection, and market stability. By securing full DFC approval, Sidra has demonstrated rigorous compliance with anti-money laundering, AML, and Know Your Customer (KYC) protocols, robust capital adequacy and risk management frameworks, transparent corporate governance aligned with the UAE's Financial Services Regulatory Authority, FSRA. This is a stamp of institutional quality that instantly elevates Sidra from a speculative token to a regulated financial infrastructure provider. The broader message: when a blockchain company achieves this level of regulatory acceptance, it no longer operates in a gray area. It enters the mainstream with the ability to forge partnerships, access banking rails, and serve high-net-worth clients, all under the protection of one of the world's most respected financial centers. With this approval, Sidra can roll out 3 critical services right away. 2.1 Digital Asset Custody Institutional Custody Vaults, secure insured storage for SDA and partner tokens under DIFC's regulatory umbrella. Think of this as the equivalent of a bank vault for crypto, with third-party insurance and audited smart contracts. Multi-sig governance, layered signature requirements for withdrawals, ensuring no single actor can move institutional funds. Impact: hedge funds, family offices, and corporate treasuries can now allocate significant capital into SDA with confidence. 2.2 Sharia-compliant banking products, profit-sharing savings accounts. Deposit SDA and earn yields distributed via a takaful-style profit-sharing model fully compliant with Islamic finance principles. Ethical lending pools, zero-interest loans backed by real-world collateral assets packaged as sukuk bonds. Impact: Sidra becomes the first on-chain bank offering true halal financial services, bridging crypto and faith-based finance. 2.3 Cross-border remittance and FX instant settlement corridors. Enable instant, low-cost transfers between the DIFC and global banking partners in USD, AED, and major fiat currencies. On-ramp/off-ramp solutions, seamless fiat gateways for corporate clients and high-net-worth individuals to move funds on and off-chain. Impact: Sidra can undercut legacy remittance fees, often 3–5%, with near-zero cost transfers, an enormous win for migrant workers and exporters in the region. How Sidra stacks up against Ripple, Stellar, and others. Let's compare Sidra's milestone with 3 major players. 3.1 Ripple, XRP status, ongoing legal battle with the US SEC, no formal license in major financial hub. Contrast: while Ripple courts controversy, Sidra enters DIFC fully sanctioned, sidestepping legal ambiguity. 3.2 Stellar, XLM status, widely used for remittances but lacks a banking-grade license under top-tier regulators. Contrast: Sidra marries Stellar-like focus on cross-border payments with the regulatory rigor required for institutional trust. 3.3 Coinbase status, publicly listed in the US and regulated by multiple state and federal bodies, but primarily an exchange, not an end-to-end financial services provider. Contrast: Sidra integrates custody, banking, and DeFi on one platform under a single regulatory framework. Takeaway: Sidra isn't just another token or exchange, it's a vertically integrated financial infrastructure provider, fully regulated at every layer. Insider perspective: how Sidra secured DIFC approval. Phase 1, pre-application. Sidra's legal team conducted a year-long review of DIFC's FSRA requirements, aligning its corporate governance with stringent global banking standards. Phase 2, pilot programs. Small-scale trials with select corporate clients in the DIFC free zone, demonstrating KYC flows and AML compliance. Phase 3, full submission. Comprehensive package including audited smart contracts, financial statements, and independent Sharia board approvals. Phase 4, regulatory review, 90-day intensive scrutiny by FSRA involving live system tests and on-site inspections. Why it succeeded: the blend of technical robustness, ethical financial models, and transparent governance convinced regulators that Sidra was ready not just to participate, but to lead. SDA price roadmap, short, medium, and long-term. Given this approval, let's project how SDA might trade. 5.1 Short-term, next 30 days. Anticipation run. Expect 25–35% upside as traders front-run institutional on-ramps. Watch for resistance around 6 cents, 7 cents. Key signal. Look for volume surges on DIFC announcement anniversaries or service launch teasers. 5.2 medium term, 3-6 months, institutional entry. Once custody services go live, big players allocate 1-2% of portfolios. SDA could stabilize between 8 cents, 10 cents. Key signal, whales moving SDA into custody vaults. Monitor on-chain flows to known institutional addresses. 5.3 long-term, 12-18 months, global DeFi integration. With Sharia banking products and remittance corridors live, SDA becomes a core settlement token. 12 cents, 15 cents becomes plausible. Key signal, launch of major regional partnerships, government pilots in other GCC countries and Africa. Risk management, always use strict stop-loss levels just below key support at $0.045 to protect against broader market downturns. What this means for the Sidra family. This isn't just a bullish story for traders, it's transformational for every stakeholder. Developers, build DeFi applications on a fully licensed platform, no more navigating regulatory gray zones. Businesses, integrate blockchain payments with DFC-backed credibility, opening B2B corridors in the Middle East and beyond. Retail users, access institutional-grade custody, profit-sharing savings, and low-cost remittance, all from your Sidra wallet. Sharia scholars, delegate oversight to a system that embeds Islamic principles in every smart contract. Community call-out, if you're a Sidra validator, developer, or evangelist, this milestone is your launchpad. Share your success stories using #SidraDIFC on social media and let the world know you're part of a regulated revolution. If you're still with me, drop a like right now to support the channel and subscribe to TJ Crypto World for ongoing in-depth coverage of Sidra's post-approval rollouts. Don't miss a single update that could shift the market. Upcoming milestones and timeline. Mark your calendars. Here's the accelerated timeline. August 2025, official launch of institutional custody vaults. September 2025, go live of profit-sharing savings and ethical lending pools. Q4 2025, cross-border remittance corridors between DIFC and major banking partners. Q1 2026, expansion to other free zones in the UAE and pilot programs in Bahrain and Saudi Arabia. Mid-2026, integration with global DeFi platforms. Potential listings of tokenized Sukuk on Ethereum and BNB chain. Each launch phase will act as a catalyst for new price waves, so align your entry and exit strategies accordingly. Navigating regulatory landscapes globally. Sidra's success in the DIFC sets a template for blockchain regulation worldwide. Model for other jurisdictions. Authorities in Singapore, Hong Kong, and Abu Dhabi are studying Sidra's framework to craft their own digital asset regulations. Global standard setting. Sidra's Sharia board works alongside FSRA to create compliance blueprints that could evolve into ISO standards for fintech. Network effects. As more regulators adopt similar frameworks, Sidra chain becomes interoperable across multiple licensed zones, boosting liquidity and use cases. Action item, keep an eye on regulatory announcements in key markets. Each new jurisdiction that mirrors DFC's approach expands Sidra's addressable market. Community engagement and education initiatives. Sidra isn't just launching products, it's building an ecosystem. Virtual boot camps, training modules for developers on how to launch Sharia-compliant dApps, webinars with FSRA experts, Quanda sessions demystifying the approval process for enterprise clients. Sidra Academy, a learning platform for students and scholars to master decentralized finance under Islamic law. Why it matters. An informed community drives adoption faster than any marketing campaign. If you're not yet part of a local Sidra meetup or online cohort, join one today. To wrap up, Sidra's DIFC regulatory approval is more than a trophy. It's the cornerstone of its transformation from a promising blockchain to a fully regulated financial infrastructure provider. With custody vaults, halal banking products, and instant remittance corridors on the horizon, Sidra is poised to lead the charge in mainstream blockchain adoption. Thank you for staying with me on this in-depth journey. If you found value here, smash that like, subscribe, and leave a comment predicting which Sidra service launch will trigger the next price explosion. Don't forget to click on the video next to this one, How to Stake SDA for Maximum Yield, and prepare your portfolio for Sidra's next act. Until next time, I'm TJ. Stay informed, stay strategic, and keep building the future of regulated, ethical finance. Peace and profits.